ladies and gentlemen. Without further ado, this very important panel over this two-day Dialogue Fiji State of the Economy dialogue is concentrating, as the MC had said, on our macroeconomic reality. It's a reality check on the state of growth, debt, and economic resilience here in our beloved Fiji. Our panelists have been given 3 questions to prepare their panel interventions on. Question 1 is, what is the true state of the Fijian economy from their perspectives, and what are the biggest risks and opportunities currently facing the country? 2, how sustainable are Fiji's fiscal and debt positions, and what policy choices are required to safeguard the short, medium, and long-term economic stability of Fiji? And 3rd, what reforms are needed to strengthen economic resilience and improve living standards in an increasingly uncertain global environment? Our first speaker this morning is none other than the World Bank senior economist for Fiji and Tuvalu, Dr. Naomi Mathenge, to present her interventions. Thank you.
As we wait for that to be sorted, good morning, everybody. Thank you to Dialogue Fiji for inviting us, all protocol observed. It's a great honor to be invited this morning to talk about the state of the Fijian economy, looking at the risks and opportunities and the reforms that are needed to take us forward. So rather than follow the 3 questions as they've been asked, I've opted to look at it in the form of a story. And we'll look at where the economy is. And I know the big question on everybody's mind is, what do we do now, given all the challenges that we are facing? So I've titled my presentation this morning, or my perceptions, my thoughts towards high income status, which is the aspiration for Fiji, and looking at Fiji's future growth through people and productivity. So let us look at what we are seeing in terms of the economy. If you look at the past 10 years, the past 15 years, we see that Fiji has been resilient. And short-term growth has been driven by tourism, but when you look at the average growth rates in the short term, it's been below 3.5%. So the graph on our left shows how the real GDP has been looking at. And we looked at between 2014 and 2018, the average growth rate was about 4.3%. Now we have that dip between 2020 and 2022, which is the COVID-19, and that brought an interruption to our growth trajectory as we were seeing it before the pandemic. Then what do we see after the pandemic? We see growth getting back to its numbers, but we don't see the 4.3 average that we had seen below the pandemic. So in as much as the economy has returned to a growth trajectory, the average growth rate between 2023 and 2025 has been around 3%. So there's that shaded part, which is the projection. How does the future look like? And I know we got a very good presentation this morning from the IMF to show the projections. And the projections are based on what we are seeing right now. So we've had to reduce our projections to take into account the realities as we are seeing them now. So we are seeing an average growth rate of below 3% going forward. So what do we see where we are coming from? We are coming from 4.3 average before the pandemic. And then we had immediately after the pandemic, during the recovery period, a period of 3% average growth rate. And then looking into the future, what are we seeing? We are seeing an average growth rate which is below 3%. So that's the reality we are looking at in terms of growth. And what is driving the Fijian economy is mostly tourism. If you look at the monthly numbers, right now, the latest data we have up to until March doesn't tell us much, because you can see, looking at the trend, we have growth, we have tourist numbers peaking in around July. We have the numbers looking like the past 2 to 3 years up until March. But we wait for the numbers after April. That is what will tell us the reality of how the economy will look like, because tourism accounts for, directly and indirectly, about 40% of the Fijian economy. But it's also important to look beyond the macro numbers. Growth has not translated into enough jobs for most of the people, and there's an untapped labor supply. Our recently released Pacific Economic Update shows that many of the workers are in low productivity agriculture and lower segments of the service sector. So what does this mean for the economy? It means that even as the economy is growing, the sectors that are driving the economy are the low productivity ones. I mean, if you look at agriculture, that's where most workers are in. If you look at the services sector, it is the low segment sectors where many workers are concentrated. Number two, labor force participation has not kept pace. Over the past couple of years, we've seen that female labor force participation has been about just 40%, compared to close to 80% for males, and this has been unchanged for a while. And what this tells us, it points to structural barriers that are preventing women's economic participation in the economy. And for us to move together, we must tap into what women can offer. We must tap into what men can offer for the economy, because we are all growing together. If you look at the youth, about 19% are not in education, they're not in employment, and they're not in training, what we call the NEET. What do we call these youths? Are we calling them the idle youths? And what potential do they have? What does this mean for our economy? With the rising youthful population, there is an opportunity to tap into this demographic. One, we can turn it into a demographic dividend, where the youth, where we tap into this opportunity to lift long-term growth. Leaving the youth behind also means that we are looking at potential declining social contract from this youth. But then, how do we bring this youth into the labor market? How do we take advantage of women and ensure that they're also able to participate in the economy? One, we need a jobs-led growth strategy that expands labor demand, strengthens human capital, and labor market function. And so the action now for us to be able to build a resilient tomorrow is an action on jobs, skills, and productivity. Why? Because when we bring these people into the labor market, when we ensure that they can participate economically, it means that they can generate the revenues that the government needs to be able to run its functions tomorrow. Without tapping into this, then the question that we'll be asking is, how sustainable is our growth model right now if we are growing, and what we are growing with is what we call jobless growth? We have a slogan we use back home and say that we can look at the macro numbers and we can say that the numbers are looking good, but how are things looking like on the ground? We all know that the private sector is the engine of productivity and job creation. And as of right now, it stands constrained. And I will not preempt the discussion that we will have this afternoon. So let's look forward to what the private sector discussion will look like this afternoon. What are the current realities that we are faced with right now? And this is not just for Fiji, but it is looking at the whole economy. We are hit by a shock. The first macro indicator that gets hit is the revenues. So revenues decline, but spending does not decline. In fact, spending increases because now we have to take care of the vulnerable in the society. So we have declining revenues and spending increases. If you look at government finances, there are limited fiscal buffers. And the limited fiscal buffers, we look at the last point here where it shows the high exposure. And as a result, government has to make tough calls. It has to make adjustments to the plans that it has done at the beginning. Right now, it's going through the budget consultations. Budget consultations were held last year. The government came up with strategies on how to spend and how to raise revenues. But now it has been hit by a crisis. So what does the government has to do? It has to make adjustments. What adjustments have been made right now? We have growth and investment on one hand, and on the other hand, we have the vulnerable in the society. We've seen fuel prices going up. We have the vulnerable in the society that have to be taken care of. So in a situation where the response right now has been a balanced government, what government has done is to take away finances that were meant for capital expenditure, and that has gone to social protection. The government has announced 3 months of social protection, but as we all know, we're in a crisis that is unfolding. It's not the end. We do not know how the crisis will look like tomorrow. We do not know the response that will be required tomorrow. So for the 3 months that government is going to protect the vulnerable, where have those resources come from? They've come from reprioritizing what had been agreed in terms from the budget. So taken CAPEX, taken it to social protection. What does that mean for the economy? It means that tomorrow we will have low growth because we've not invested today to bring about the growth we needed tomorrow. But that's a response that government has been forced to make because of the shock. That's the adjustment we are calling about. What does this lead us to? It leads us to now another high exposure. And if you look at the frequency of the shocks, we had COVID. 2016, we had Tropical Cyclone Winston. 4 years later, we had COVID. 2025, we had the trade uncertainty in the US. And then now we have the conflict in the Middle East. So we are seeing shock after shock after shock. Before the government can rebuild its fiscal buffers, it's hit by another crisis. So there is no time to build the fiscal buffers to be able to respond to the next shock. And that's the reality that Fiji is facing today. That's the reality that many countries are facing today. The question now is, how do we protect our future while managing the challenges that we are facing today? So this graph looks at the revenues and the expenditures. As we all know, that the revenues that the government collects is what helps it to implement its strategies or to spend. Spend in education, spend in human capital, spend on infrastructure, and many other things that the government has to spend. The circled part looks at 2016, but even going back, if you look at 2016, we have the light blue line is the tax revenues. And here I've looked at the tax revenues because that is what is being generated from the economic activity in the country. The other revenues, the fees, the charges, and the sale from government assets that adds to the total revenues. But let's focus on the total revenues because that's what you and I pay out of the economic activity that we are engaged in, out of the value addition that comes from the economy. So we have the tropical cyclone 2016, and what happens? Revenues dip a little bit. We have a bit of recovery, and we see 2017, 2018 revenues recovering. Now, 2019, 2020, 2021, 2022. What happens to revenues because of COVID? They are hit. Revenues decline because economic activity is interrupted, and so revenues, it means that you cannot pay the taxes that you are paying. We saw tax holidays being given to be able to cushion everybody, to be able to cushion all of us from the vulnerability. But what happens to expenditures? Expenditures rise. Now, fast forward to 2025, 2026. So you see a bit of recovery, 2023, 24, 25. But what happens in 2026? We have another crisis. We've not had time to rebuild our fiscal buffers. Now, the revenue projection is that it's going to decline because government will need the resources to be able to continue with social protection. But expenditures are not declining as consequently, except the CAPEX that has been reduced. So the government has to make tough choices and say, do we still provide for infrastructure development, which is needed for tomorrow's growth, but we still need to protect our people today. The aspiration is to become a high-income country by 2025, and we need to rise above a low-growth trap with stagnant income per capita. So one of our diagnostics had 3 scenarios. The red line is the baseline scenario, which is where we are at right now. If we continue growing at the pace we are growing right now, we will never get to the high income status, which is one of the aspirations laid out in the National Development Plan. We have an ambitious scenario, which is the green line, which says that for us to be able to achieve that high income, and the constant line is the high income country threshold. So those are the incomes that we need per capita to be able to be classified as a high income country. So what does this mean? It means we have to grow at an average of 5.7% per year over the long term. And what we identify are 2 goals that can help us achieve this. I have 1 minute remaining, so I'll try to run through that. 1, we have to create job opportunities. And 2, we have to enhance workers' capacities. How do we do this? We need to move from policy action to investments to results. And the question is, how does Fiji survive but also position itself to thrive in a changing world? Creating job opportunities, we look at three policy actions. One is enabling businesses, unleashing competition, and unleashing competition means that we have to thoroughly evaluate the state footprint in sectors where the private sector is better able to operate. And we also have to promote foreign direct investment. In the early 2010s, FDI was about 10% of GDP. Right now, FDI is about 3.5% of GDP. The other set of actions that entails enhancing workers' capacities looks at skilling healthy workers and facilitating women into jobs. We know the high rate of NCD, but we need to also be able to ensure that the workers we have tomorrow are healthy and are able to produce. We should also be able to tap into this segment of the female labor force that has been made, and we all know that women are mostly the caregivers. So they're having to make the decision: do I contribute economically, or do I look into the care economy? Why are they having to choose between participating economically or having to take or being in the care economy? We have to look at our NCD. We have to promote healthy habits. Now we have an enduring, this is my last slide, and what we say is that we have an enduring risk, which is climate change and natural disasters. And we also see the increased frequency and severity of climate events that can worsen the fiscal stress and disrupt growth trajectories. Our analysis shows that if we don't take care of adaptation, and this means that looking at adaptation, fortifying the investments and climate-proofing the investments that we already have, this will slow our ambition of getting to high income status. But remember, the starting point is we need first to be able to achieve this 5%, over 5% growth rate, but also we need to be able to create jobs for you and I and for our youths, which is a bulging, which is what we are looking at. It could be a dividend. We need to be able to create jobs for them so that they can also be able to contribute to the economy and generate the revenues that the government needs to run its affairs. Thank you very much.
Thank you very much, Dr. Naomi. Our next speaker is Dr. Nilesh Lal, the Executive Director for Dialogue Fiji. Ladies and gentlemen, Dr. Nilesh. Mr. Nilesh Lal, ED for Dialogue Fiji. Thank you.
Thank you very much, Moderator. So my focus is going to be on public debt, fiscal sustainability, and I'd also be considering what debt to GDP ratio actually means in the current context and how it should be interpreted. So the official narrative, as we've heard, is that debt to GDP ratio is falling. Economic recovery has been strong. Tourism has exceeded pre-pandemic levels. Government revenues have increased, and fiscal consolidation is underway. So these have been some of the official narratives that has been advanced, not just by the Fijian government, but also by institutions like World Bank, IMF, ADB as well. However, if you look at the data, what it shows is a more damning picture. Public debt continues to increase in dollar terms. So in real terms, public debt has really increased very substantially. Deficits remain substantial despite recovery. So if your economy is in a state of recovery, what you would expect is for the deficit to fall For some time it really did. This is the deficit in the national budget that I'm talking about. But we saw a reversal of this trend last year for the current fiscal year. Capital expenditure is declining. It should be a real cause for concern. Operating surplus has almost vanished. Fiscal space is becoming increasingly constrained, and this has actually been admitted by the government itself in its pre-election economic and fiscal update, which was released just 2 days ago. Future growth assumptions are doing much of the heavy lifting. So the question that arises there is whether Fiji's economic recovery has formulated into fiscal recovery. Now, I think it is very critical for us when we are assessing Fiji's fiscal position to benchmark with a pre-pandemic year. So the year that I've used is 2019-2020, which was a below average year for Fiji. But even benchmarking against a below average year, you will see that the current fiscal year has got deterioration on a number of fronts. So when it comes to total expenditure, it has increased, a very significant 4.8 billion. Public debt has ballooned to 11.7 billion. Budget deficit, 886 million. Capital expenditure has reduced to 927 million, and so forth. And operating surplus has reduced very drastically from 133 million, and I think in the last fiscal year it was somewhere around 580 million, to a very small 28 million. So there's basically very little buffer left in as far as operating surplus is concerned. Now, this is the trend that public debt has seen. It has continued to grow. Of course, there was a notable growth between 2020 and 2022. That is owing to the pandemic. But despite the huge recovery that happened, the massive rebound of the tourism sector that we saw, public debt has continued to increase. And it is forecasted to be 11.37 billion. These are the latest figures from Ministry of Finance by July 2026. So there has been an increase of 2.2 billion in the last 3 years. And this has been the increase experienced in a non-crisis year. Now, debt to GDP ratio is often, it has been touted to make the point or to advance the claim that Fiji's fiscal situation is actually improving. However, if you look at that particular indicator, if you have a natural increase in the GDP, the debt to GDP ratio is obviously going to fall. So what we started off with was a very low GDP that had been drastically affected by the COVID pandemic, and that is the baseline that people are comparing against. So even if there was zero intervention by government, GDP would have grown, right? But what we saw happen in 2022 and the earlier part of 2023 was a massive rebound in the tourism sector. So tourism earnings increased by 59%, and that was a very significant increase. Now, if for a sector that is contributing more than 40% of the country's GDP, if it has expanded or its earnings have increased by 59%, what you would expect is that the margin of growth for the GDP should be higher, but it wasn't so, right? Which means the other sectors underperformed, right? So the GDP recovery story has been key to reducing the debt to GDP ratio, but what could be said is that the growth potential hasn't been realized despite the GDP increases that we've seen in the last couple of years after the during the post-pandemic period. So right now GDP is around 14.66 billion. GDP in 2021 was around 10 billion, and so there has been a 46% increase in GDP. Now debt stock in 2022 was 9.13 billion. It has increased to 11.7 billion in 2026, and that has been a 26% increase. So artificially, the debt to GDP ratio looks better, but if you consider the increase in debt in real terms, it has been very significant. Now, revenue recovery for Fiji has been extraordinary, and you got to thank the very substantial 66% increase in the VAT rate for that. So what it has led to is a huge increase in the government's revenue. And during the 2023-2024 fiscal year, there are other taxation measures that were undertaken to increase government revenue substantially. And this was increase in the departure fees and also increase in corporate tax. So all of this have significantly increased, as you can see, from fiscal year 2023 government revenue. Now, this has of course placed a lot of burden on Fijian taxpayers, right? And they were told that this is absolutely necessary for fiscal consolidation, right, to reduce debt. So taxpayers have been burdened with this very significant increase. Travelers to Fiji have been burdened with a substantial increase. Businesses have been burdened with a substantial increase. Has that translated into fiscal consolidation? So what have taxpayers of this country received in return for that 66.7% increase in VAT? And that is the question that needs to be asked. So the revenue has increased by 1.19 billion since 2022, and debt has increased by 1.95 billion. So it hasn't, the revenue increase hasn't kept up. And in fact, if you look at the latest figures that have been released, I think the debt increase in the last 4 years is around 2.45 billion. So if revenues increased by 1.19 billion, why did debt grow by 1.95 billion during a supposed recovery period? Where did the money go? So we'll see where the money went. So this is the proportion of government expenditure. So the green bars on top show capital expenditure, and the red bars show operating expenditure. So expenditure mix has significantly deteriorated. As you can see, the green bar has continued to become shorter, which means most of the borrowing that has been happening in the last couple of years has been to fund operational expenditure. Now, the economic wisdom is that you only borrow to grow the productive capacity of the economy. If you are borrowing to fund recurrent expenditure, operational expenditure, then you have a very significant structural problem. So this capital expenditure as a share of total expenditure has dwindled to 19% for the current fiscal year. And it was as high as 38% in fiscal year 2015-2016. So essentially, government spending is becoming aggressively consumption-oriented. So the big risk is that a nation cannot afford to service a 11.8 and growing 11.4 billion and increasing debt load by cutting the very productive assets and infrastructure that is required to generate future economic growth. The other thing that has almost disappeared is the operating surplus. Operating surplus is the balance between operating revenue and operating expenditure. So as you can see, by fiscal year 2025-2026, this has declined, compared to the previous fiscal year, it has declined by 570 million, which is around 95%. So basically, there's no buffer left in as far as government's ability to spend on other things apart from its operational expenditure is concerned. So whatever the government is earning in revenue, most of it is going towards funding its operational expenditure. So we never had this kind of a situation. Of course, we had it during the pandemic years, because government revenues had plummeted, right? But those were extraordinary circumstances. Previously, as you can see, we used to have a very large operating surplus, and that has all but disappeared. Operating surpluses are needed to repay existing debt, finance new investment, build fiscal resilience, and avoid structural deficits. The other thing, I just got this, I just downloaded this last night around 3 a.m. I was going through it. And what I've also noticed in here, in the fiscal update that has been released by the Ministry of Finance, is that there are also funding gaps. So we have not been able to raise revenue from external debtors. So most of the borrowing that the government has done so far in the 9 months of this fiscal year has been from domestic sources. And that is never a good thing, because we are crowding out the domestic financial market. Right? And so we have not been able to source money from the international financial market. Right? And that has been attributed to the failure of various government agencies to be able to get that funding, because we need to have, those fundings are normally targeted for specific projects and so forth. So that funding gap is very substantial. So this is a very dangerous structural shift. New borrowing is, as I mentioned, increasingly required simply to support recurrent everyday government consumption. Uh, 2025-2026 budget was a turning point in as far as the fiscal consolidation efforts of the country are concerned. As you can see, there was deterioration across almost all major components of the budget. Now, the long-term fiscal risks that have arisen from the situation that we currently have, we've got a surging nominal debt, a very sizable debt that we need to contend with. A lot of money is going to be committed towards debt servicing every year, right? Then we have a shrinking taxpayer base. So a lot of people that have migrated from this country in the last couple of years, owing to various factors. Now we had a very small taxpayer base to start off with, and that has shrunk further. So that is obviously going to further deteriorate government's fiscal position. And the shift to consumption that we've seen, so capital expenditure has diminished to 19%, while operational expenditure has continued to grow. For the current fiscal year, it is around 81% of total expenditure, total budget of government. So I have three conclusions. Debt is still increasing despite economic recovery, right? And revenue, of course, has recovered dramatically, but that has been mainly due to painful measures like VAT reduction, right? VAT increase in 2023, and a very substantial VAT increase, I would say. And then later on, there was an attempt to reverse a bit of it, right? But the VAT reduction that was done, the 2.5%, did not have any major impacts on retail prices, right? So the effects were seen there on inflation very temporarily, and then they wind off. So again, what that policy has managed to do is put more money into the pockets of traders at the expense of the state coffers, and the people have not benefited in any way. What we're also doing is borrowing more and investing less. So that kind of fiscal discipline is certainly lacking. We are borrowing just to fund recurrent expenditure. Civil service is bloated. The salary bill for civil service has substantially increased. Very controversially, we've got the largest cabinet in Fiji's history, right? And all this have happened ironically at a time when people have been asked to tighten their belts. So that is why a lot of that is quite difficult to also, it's a difficult pill to swallow for taxpayers and others, businesses as well, that have been affected. Some of the pertinent questions for dialogue that will arise from what I've just presented is if revenues have increased by 1.76 billion over 4 years, why has the fiscal position not improved more substantially? Or what fiscal benefit have taxpayers received in exchange for a 66.7% increase in VAT? If borrowing is increasing but investment spending is falling, what exactly is the debt financing? Why has the operating surplus collapsed or near collapsed during a period of strong economic recovery? And if another COVID scale shock happened tomorrow, how much borrowing capacity do we have? So I will leave you with those questions to ponder upon. Thank you.
Thank you very much, Executive Director Nilesh, for that sobering perspective. And to follow this panelist is Mrs. Poonam Singh, the Acting Head of Strategic Planning for the Ministry of Strategic Planning for the Government of Fiji. Poonam.
Thank you, Ms. Naomi. And I think most of the things are covered by my earlier speakers, and Mr. Nilesh has also provided the reality checks on what the numbers are showing us. So I think the timing of this conversation is really important and is coming at a very specifically right time. We've just released the 2026 pre-election economic and fiscal update. That's by the Ministry of Finance. And most likely RBF is also going to release the projections, which perhaps provides the most comprehensive picture of the state of the Fijian economy. What makes the updates and the data that has already been presented important is it highlights a transition to the Fijian economy. It tells a story. What is Fiji's economic story? The discussion is no longer limited to how we are going to, or how we have recovered. Rather, it's about how we can sustain this growth with the revised projections, how we're going to manage fiscal pressures and addressing structural challenges. Also building long-term economic resilience, noting the increasingly uncertain global environment. So basically, what are these reports telling us? When we talk about growth, it is important to recognize that Fiji is not operating in isolation. One. The IMF and the World Bank and other international institutions have also highlighted the same, with the increasing downside risk to global growth arising from heightened geopolitical tensions, fuel prices, trade disruptions, elevated energy prices, and growing uncertainty in the international market. So as a small and highly open economy, Fiji is inevitably affected by these developments. The update, the fiscal update released by the Ministry of Finance, reflects these realities. After growing by 3% projected in 2025, the Fiji economy is projected to grow by 1.5% in 2026. This is a revised down growth rate from around 3.2%. And then later we are looking at recovering modestly to around 2.5% in 2027 and 3% in 2028. What these figures are really telling the economy is that Fiji's economy remains on a growth path, but not at the pace of growth that we anticipated. Growth is actually slowing down. We are moving from strong post-pandemic recovery phase into a period of moderate growth. In other words, we can say economy is still expanding, but at a slower trajectory than we have experienced in recent years. So what does this mean for us? Slower growth does not mean recession, but it means that fewer opportunities for business to expand, slower job creation, softer government revenues, and less fiscal space to invest in development priorities. As Naomi said, it also means that we must be more deliberate about improving productivity, attracting investments, diversifying our economy, and strengthening our resilience to external shocks. The reality of the matter still remains that Fiji cannot control global oil prices, the geopolitical conflicts of international economic conditions. What we control is how competitive, productive, and resilient our economy is in actually responding to these challenges. The challenge before us is not simply how to maintain growth, but how to position Fiji to grow faster, more sustainably, and more inclusively over the medium and long term. And with the revised projections, we've seen subsequently visitor arrival growth has also been revised downwards to 1.7% from an earlier forecast of 2% for the 2026 year. Trends also indicate weakening consumer demand and rising cost pressures and increased economic certainties. And our end-of-year inflation is expected to exceed 6%. So with the fuel prices on a hike, we also need to think about the impact on the key institution industries, like the transport sector, Fiji Airways, and then leading that to the tourism sector, and also including impact on the energy and energy sector. Turning that discussion into the fiscal performance, the update also presents both progress and challenges. On the positive side, Fiji has made significant progress in restoring fiscal stability following the pandemic. The deficit had declined from 12.3% of GDP in 2021-2022 to 2.5% of GDP in the 24-25 financial year, while public debt had fallen from a peak of 91.8% to 79.0% over the same period. So with that, the fiscal picture also highlights the growing expenditure pressures. And this is very well captured by Mr. Nilesh on government spending. Government expenditure has increased significantly over the past 3 years, rising by approximately 30%. I think the green and the blue charts that were presented earlier. 35% increase in the past 3 years. Revenue projections for 2026 is estimated at around 3.9 billion, while expenditure is projected at 4.8 billion. While these revenues have slightly declined, say from 4.05 to 3.9 billion from last year, expenditure, we are anticipating it to increase by 500 million. How are we going to fund this expenditure? So this reflects increased spending on public sector wages, social services, infrastructure, debt servicing costs, and other development priorities. The critical question is whether the increase in expenditure is generating the corresponding increase in productivity, economic growth, and resilience. High spending in itself is not a measure of success. Every additional dollar spent must be measurable, must deliver measurable outcomes for citizens, businesses, and the economy. The issue is not whether government is spending. More clearly, it is spending more. The real question is whether taxpayers are getting better outcomes, better service delivery, and stronger economic growth in return. While some of these expenditures, in fact, has been necessary to support recovery, rebuild public service, and address development needs, it also raises the question about fiscal sustainability over the medium term. The update also highlights the importance of improving the quality of public spending, strengthening expenditure controls, and ensuring that fiscal resources are directed towards investment that generate long-term economic returns. Ultimately, fiscal sustainability is not about reducing deficits and debt. It's about creating sufficient fiscal space so that we are able to respond to the future shocks when continuing to invest in these areas. Do we really want to go to a path where we become a debt-driven economy, or we want to ensure that the economy sustainably grows? So what does our international organization say? IMF says what government should do, and this is from the June report. This is published on 5th June 2026. The cost of living concerns should be addressed via targeted social assistance programs. And this is to restore fiscal buffers. IMF report recommends reaching a 2% surplus by the medium term in the financial year 2029 to 2030, which would bring public debt to below 70% by 2032 to 2033 financial year. And to sustain higher growth, the composition of public spending needs to be reoriented to capital investment. Main policy recommendations include cost of living and supply pressures on the economy from oil shocks while restoring fiscal buffers and supporting growth. And these include allowing fuel prices to increase. Remember, this is what IMF is saying and not me. And likewise, as the government has already doing that, and this is to allow economicization. Cost of living concerns should be addressed to restore fiscal buffers. We recommend the 2% surpluses. And to sustain higher growth, the composition of public spending again needs to be reoriented to capital investment. Liquidity conditions should be gradually normalized. We're not looking at one financial year to normalize things in the economy. We're looking at gradual normalization into the growth and projections for the economy. And monetary transmissions to strengthen with further development of operational framework. To raise this potential growth, efforts to prioritize and sequence reforms should be doubled, with emphasis on strengthening implementation capacity and measures that support private investment. Also improving public investment management and enhance climate resilience. So in responding to these challenges and what the international organizations are telling Fiji should do, some of the, I thought it would be important to mention 3 key priorities that government is currently prioritizing on. First, there is a need to improve the quality and efficiency of public spending. The capital and operating mix, current projections are for 19% to 81% mix. And this 19% of the total expenditure is only 6.6% of the GDP. Again, the issue is not simply how much government spends, but whether that spending delivers measurable improvements into the economic growth, productivity, and service delivery. Second, Fiji must continue to create conditions for stronger private sector-led growth. This is very important. Achieving the ambitions also outlined in the National Development Plan 2029 and 2030, it will require greater levels of private investment. No government can do everything on its own. We need all stakeholders in nation building. This means for government to reduce regulatory barriers, improving ease of doing business, addressing labor and skill constraints, strengthening access to finance, and creating an environment that allows businesses to invest, expand, and create jobs. And the third one is government is prioritizing to continuing rebuilding fiscal buffers and maintaining a credible path towards debt reduction. While borrowing has played an important role in recovery and financing development priorities, actually maintaining debt sustainability remains critical for our long-term economic resilience. And this requires prudent financial management, gradual debt deficit reduction, and ensuring that the borrowings are actually directed towards productivity and investments that strengthen growth. The update also provides that government is intending with the fiscal space about $790 million projects that they have already started to work on. So we are anticipating this to create economic growth and an effort to stabilize the economy in the medium and long term. So together with these priorities, the projections really tell us that Fiji's economy is still growing, but at the pace of growth is slowing. And we are entering a period where resilience, productivity, and sound policy choices will matter more than ever. The challenge, again, before us is not simply how to grow, but how to sustainably grow, and at the same time managing our debt levels. Really, the decisions that government makes today will determine whether Fiji can transition from this recovery into a long-term prosperity. And as we look ahead to the national budget on 26 June, we'll be looking for a clear path forward, one that balances both growth with fiscal responsibility, supports investment and jobs, and strengthens our economic resilience. And with those words, thank you.
Thank you very much, Poonam, for that. Ladies and gentlemen, our next speaker is Dr. Mahendra Reddy, a senior economist with the University of the South Pacific, NACA.
Thank you, Dialogue Fiji, for organizing this discussion. Quite a bit has been said about the physical status and economic growth. Now, the purpose of today's discussion from my point of view is to answer the central question, whether Fiji's economy today is more productive, more diversified, physically strong, and institutionally resilient, and better positioned for long-term growth than it was a decade ago. Okay? We all have seen the growth rate projections vis-a-vis the 10 years ago, and the expected growth rate for a developing country like Fiji in real terms is about, minimum of, in real terms, about 5%. We have been, for the last 3 years, post-recovery, 2 years, much less than the desired amount of 5% in real terms. Now, when you have such a low growth rate, what is the implication on the economy? You look at the debt level. Everyone has been talking about the debt level, and I wouldn't be too bothered about the nominal amount of debt level. What I'm bothered about is, what is being created by that borrowing? What is having impact on the economy? Now, you look at why the debt to GDP ratio has been increasing. 10 years ago, our debt to GDP ratio was 48.3%. The international benchmark is around 4% for a developing country like Fiji. We were around that, very comfortable. But over the time, steadily has increased to 77.5%. Now the thing is this: the growth rate of the debt pile up has been much higher than the growth rate of GDP. When the debt that you have created is not translating into output, then you will see that the debt of GDP ratio will, of course, increase. So that is the issue. The issue is that you create debt, you have to borrow. Look at all developing countries. They borrow to grow. The question is, and I think everyone talked about, is that what is that borrowing channeled towards? And it should be channeled towards raising the productive capacity of the economy, and then you will see the private sector generating surplus, and that adds up to growth, and that's how it should be. So if you have the GDP growth rate much higher than the debt growth rate, you'll see the debt to GDP ratio coming down. That's the fundamental problem that we have. So I won't be too bothered about the nominal amount of debt. What I'm bothered about is that our ability to raise GDP at a much faster rate than the debt. But let's look at what's the implication on the physical coverage. Now, 10 years ago, every dollar of operating revenue was able to deliver $1.35 of capex. Now, basically, we're 1-to-1. This is a very vulnerable position, Anything, now with the projection that we have, 1% and 3% for the next 3 years, we're very worried about whether we'll be at 1% or 0.9 or 0.8, meaning that we'll have to borrow to fund our operating expenditure. What have we done? Over the last 10 years, where are we? Where have we started? From $1.35, now we are 1-to-1, pretty much 1-to-1. Very precarious position. Then you look at our capex. 10 years ago, every dollar of operating expenditure was contributing to 64 cents of capex. Every dollar of operating expenditure was used to deliver 64 cents of capex. Now, we're delivering 24 cents of capex. Something wrong with government efficiency. Seriously, something wrong with government efficiency. How we are managing our operating expenditure to deliver capex. 10 years ago, 64 cents of capex were delivered per dollar of operating expenditure. Now, only 24 cents. Look at output. 10 years ago, $5 of outputs were delivered per dollar of operating expenditure. Now we're delivering $3.75 output per dollar of operating expenditure. Our impact, as the facilitator of growth through the private sector, our impact on the economic growth is falling down steadily over the last 10 years. We are not doing well. Look at capex as a percentage of total expenditure. 10 years ago, 38%. The normal benchmark for developing country is 70-30. Understandable. Where we are now? 19%. Exactly as the previous speakers have said, we are channeling more and more money towards operating expenditure. Serious issue with the physical policy making at the government level. Now you look at revenue mobilization. 10 years ago, our revenue bite was 36% of the output. Or everyone understands that government functions through tax money. The more output grows, the more tax money we will get, more we can do in terms of distribution of policies, run health, education, pensions for elderly, bus fare, free tuition fee, etc. So we expect that, a portion of the growing economy will come to, we are not in a business. Government is not in the business. Government has to get a small portion out of the national income. 10 years ago, we were getting 36%. Now we're getting 28%. Where have you gone wrong? Where have you gone wrong? Dual issue. One is the economy is not growing. Second is our bite is reducing. We're compounding. We're facing dual effect. Is the output is not increasing. We are projecting that over the next 3 years, we'll have 1 to 4% growth rate, well below the international benchmark of 5 to 6% real terms. But here, even we are having a problem of getting what we're supposed to get. What may be the reason? Are we giving a lot of concessions? Someone has to answer that question. Why is our bite reducing? Is there a rise in informal economy? Is there avoidance? Is there avoidance? Someone has to answer why is our bite reducing? If this is going to happen, then obviously our physical space is going to reduce. And that's what we have seen. That our physical space has gone down to 1. Our operating revenue is barely able to cover operating expenditure. Now, so going forward, we need a plan. We need a plan. Do we have a plan? Yes, yes. The 2025-2029 development plan. Unfortunately, we have given it away. The fundamental problems with the development plan. One, the plan has no baseline. Look, you're saying that this is a 5-year development plan. In 2029, this is where we want to be. So what's the baseline now? Infant mortality now. In 2029, this will be infant mortality. Our debt level now, in 2029, this is the debt level we should have. Our mortality rate now, this is what we're going to have in 2029. Gloss over the plan. There's no baseline, and therefore you don't know what are you targeting. We have lost it. There's no comprehensive baseline. We have lost it. How do you monitor in the absence of a target that the plan is successful or not? The second issue with the plan is that the plan was not costed. How can you have a development plan which is not costed? Go over the development plan. You list all the projects. These are the cost of the projects. You take that, call the development partners and say, look, who wants to pick up this particular project? Okay, the rest we will pick up. The government will pick up. There's no costing. You ask them, what is the cost of the development plan? They can't tell you. Who did the development plan? The secondly is that when you have a costed plan, you know that this year we'll pick up these particular projects funded by us, we'll factor it into the budget. But there's nothing as such. Now you look over last year's Finance Minister's budget speech, Honorable Finance Minister's budget speech. One mention of the development plan, para 20. Go to para 20, this is the only mention of the development plan. Now look, you have spent so much money on developing the plan, so much song and dance, it should be your Bible. Every year, when the budget speech is read, at the back of the development plan. At the back of the development plan. Because what is the budget? It's an annual development plan. And here you've got a 5-year development plan. The budget should be mapped on the development plan, the 5-year development plan. But if you just casually mention that, look, this is we've got a remarkable development plan that we have launched. Come on. Are we serious about the development plan, or was it done just for the sake of it? Well, I'm going to tell you, someone has to answer today. Here. So now on governance. World Bank has got some indicators out showing that over the last 5 years, governance indicators are revealing very positively. I have an issue with that. but that could be a methodology issue. My brief is on economic governance. Physical coverage, the ratio over the last 10 years gone down to $1.35 to 1.01. Bad governance. Public sector productivity, every dollar of operating expenditure delivered 64 cents of capex, gone down to 24 cents. I have a problem with that. Revenue mobilization, our revenue bite came down from 36% in 10 years ago to 28%. There's a governance issue. Development planning, we got this development plan, not costed, no measurable targets, weak budget and the plan linkage. Bad economic governance. So governance is not merely about corruption or perceptions and institutional arrangements. Governance should ultimately be reflected in outcomes. So if the operating expenditure continues to rise relative to capital expenditure, if revenue mobilization weakens, if physical space narrows, and if development planning lacks measurable targets and costing, then those outcomes raise legitimate question regarding the effectiveness of economic governance. So I want to go back to answer those three questions that were posed to us. Fiji's economy has recovered, but it is not yet structurally strong. We need real growth of at least 5% annually. Simultaneously, while Fiji is growing, it is not transforming. That's the issue. We need to transform our economy. Growth remains concentrated in tourism, consumption, construction, government spending, and remittances. The major risk is high debt, weak productivity, labor shortages, migration, climate shocks, cost of living pressures, and weak diversification. Opportunity, shift from consumption and tourism-led economy to a productivity, investment, and export-led economy. So we need to, apart from tourism, very good, remittances, XLR, we haven't done anything to protect our remittance inflow. We haven't done anything, despite me writing a one-page opinion piece some time back, suggesting some ways of how we could ring-fence the inflow of remittances. We need to look at the primary sectors. We're not doing much. Fiji's physical position is manageable. I wouldn't be too much bothered about the large amount of nominal debt terms. It's just like a farmer with an annual income of 20,000 has a debt of 15,000, and a businessman is having a debt of 15,000. Look, it's about the relative to the earnings capacity of the economy. So I won't be too worried about that. What I'm worried about is that we are getting into a vulnerable space with regard to fiscal policy making. So the danger is not default tomorrow. The danger is not high debt reduces physical space for raising productive. The danger is that high debt reduces physical space for raising productive capacity of the economy to manage future shocks, as alluded to by earlier speakers, cyclones, health crisis. Where are you going to get the money from? Every time a shock happens, we say, we need to get a mini budget, we need to borrow, we need to get, go to the development partners. Where is our own fiscal savings? So operating revenue must cover operating expenditure and provide fiscal surplus for capex. That is the concern with the declining operating revenue over the operating expenditure. Additional borrowing should only be used for only for productive capital investment. How many times we have to say that? All the speakers have said that. But look, the problem is that within government, we are stuck with incremental budgeting. We are very, very more worried about which ministry has got an increase over the last year's budget. Every time we're talking about how much more you got, incremental budgeting rather than output budgeting. This is the reality. I've been there, I played the game. I'm not shouting from outside. So the reforms, the two key reforms that I'm going to suggest today, the third issues that was raised by Dialogue Fiji, is that there should be a major wave of fiscal reform within the government. Now I'm going to talk about that after in a couple of minutes. Who is responsible for this mess? I'm going to take on that. I've got the place today. The key indicator, glaring indicator, reduction in OPEX, percentage of OPEX shifted to CAPEX, all these are clearly showing that some people are sleeping on the job. Simple. There should be a national movement. Please, big kere. There should be a national movement for productivity reform starting from government. Quarterly. each ministry, each institution formed to target productivity reform and pursue it. We celebrate Productivity Day quarterly, keep the narrative alive. And then we ask, what did we do tangibly to raise productivity? This should become our national mantra. The next phase of Fiji's development cannot be built simply on more spending. It must be guided by a plan with measurable targets, built on better capex spending, stronger institutions, private investment, and productivity growth. Last parting shot. Let's not measure success by how much the economy consumes. Every time we are totally engulfed with this, but rather how much the economy produces. Look, just over the last 6 months, scan and analyze the speeches by the policymakers. They're talking about consumption. How many times they've talked about output? So it's not that bad. It's about getting the economy, the physical space back on track. Thank you.
Thank you very much, Dr. Reddy, for that presentation. Ladies and gentlemen, our last panel speaker this morning is Mr. Richard Naidu, the chair for the Fiscal Review Committee, NACA.
Okay, thanks, Finau. One of the things about going last is that you can kind of endorse what everybody else has said before you. So with any luck, and there are a lot of things that I agree with. First of all, I should say, yes, I'm here because I think I chaired the Fiscal Review Committee. That was 3 years ago. Got me a lot of free lunches. I can see the Deputy Chair of the Fiscal Review Committee there, Lisa Apted. She chaired the Tax Subcommittee, so for the 15% VAT, blame her, don't blame me. Fiscal Review Committee did its job. It's finished, it issued its report. 155 pages, there were about 150 recommendations, not just VAT. But I do want to emphasize, I'm not speaking on behalf of the committee. What I'm going to say today is a very sort of personal perspective. Thanks for this opportunity, Nilesh and team. It's really important that we are all talking about these macroeconomic issues. What's become clear is that things are urgent. And I think for me, if there is a headline, it is very clear that there is a lot of advice out there, there is a lot of support out there, there are a lot of options out there, but it is for the government at the political level to act with urgency on economic issues. And the government is not doing that. The government is too distracted by other things. The government must, at political level, pick these issues up and act with urgency, and urgency is the key word. So I thought it might be worth just beginning with, why do we do it? Why do we talk about macroeconomic policy at all? Doesn't this all belong in the realm of politicians and economists and everybody else? And I think it's important that we are able to convey to people the social dimension of macro policy and fiscal policy, against the background that we talked about in the Fiscal Review Committee report, which is that more than a third of our people live in poverty or near poverty. And in order to improve people's lives, we have to equalize opportunity. What does that mean? We've got to improve health, we've got to improve education, we've got to improve infrastructure, things like water, electricity, housing. We know, if we've been paying attention, that we are not a very productive country. We have a national health crisis, and I think it was the World Bank that produced a shocking report on our state of health. We've almost forgotten about HIV. In NCDs and HIV, we are world leaders, and that's not a good thing for us to be world leaders in. We have an education sector that really is not fit for purpose anymore. And it is only the government which has the tools to address all of these issues. And I go back to the point of actually improving people's lives. And of course, that's why, for us, growing the economy is the critical issue. Growing the economy is not just about growing the economy for the rich. It's about increasing everybody's incomes, because talk as we like about the cost of living crisis and what government can do to reduce the cost of living, the truth is not very much. It's got to address people's welfare by increasing incomes. There's not very much that the government can do. I think Poonam talked about the open economy that we live in, that the government does not have options to reduce the prices that people face. And of course, the economy is, and I think this point was made earlier on, it is also the economic base for taxation, because obviously the higher the economy, or the stronger the economy, the more revenue that economy is able to generate for government. Dr. Reddy talked about the tax bite, in other words, how much of GDP government is getting. Interesting statistic, I actually hadn't paid attention to that, how it had fallen from 36 to 28%. Perhaps 36 was a bit high, I'm not sure. Not sure what the optimal number is, but that's an important thing to think about. I think it's really important we understand that it's not an option for us in Fiji to stand still. We can't be complacent and say, well, that's fine. If we're growing less quickly than other countries, it doesn't matter, everything is all right. It's not, because of course, if we are in an open economy, we are competing with the rest of the world. As other economies strengthen and ours becomes relatively weaker, that puts pressure on things like our exchange rates. Our exchange rates determine what we can import and at what price, and that also has an impact on people's welfare. So it's really not an option just for us to be able to be complacent and say that we are content with growth at the existing rates. Obviously, all of this has a political context. And it's interesting, actually, if you just look around the world at how all over the world, not just in developing countries, and indeed in developed countries, which are facing pressures such as aging populations and rising pension bills for public pensions and so on, there are increasing demands on governments. People now seem to routinely demand that governments fix every problem that people have. The world is talking about this cost of living crisis. And yes, it's a cost of living crisis in the sense that prices are going up, but there is actually another way to look at it, which is simply that prices only reflect that people's general welfare is coming down. And everywhere, people are demanding that politicians do something about it, that politicians solve every problem. And the reality, of course, is that governments cannot do that. They haven't got the tools with which to do it. But politics being what it is, particularly in this increasingly frenzied social media environment, politicians seem to feel a need to address every problem, every economic problem that people have. And there comes a point when aspirations must meet reality, and politicians just can't do that. So that, having talked about context, let's talk a little bit about the Fiscal Review Committee report. And again, there's not much we can talk about in 10 minutes, but what we did try and do was highlight what we called a triple threat. And we tried to have something that was attention-grabbing, and Triple Threat was a movie, I think, that somebody had watched. But the triple threat that we identified, and this will be very familiar if you've been listening for the last hour, but the triple threat we identified was that the government faced deep financial challenges. Its current debt to GDP ratio, as of 31 March 23, was 85%, very limited capacity to borrow or spend what is needed to improve public services for human development, climate resilience, and meaningful economic growth. We've heard a lot about the debt to GDP ratio. I agree with Dr. Reddy that the nominal debt is not so much the issue, the actual amount of debt. It is where it sits with respect to GDP. And clearly, GDP is not growing. So that was the first threat. The second was that the government had very limited financial capacity to respond to a future economic shock, such as another pandemic, a major cyclone, or an earthquake in a populated area. We forget that in the last 3 or 4 years, we have had no major cyclones, we have had no major events. The geologists tell us we are 30 years overdue for an earthquake in Suva. In that time, Vanuatu has had 2 Cat 5 cyclones and an earthquake. So it's just sheer luck in many ways that we are not under more pressure. The third threat was that despite those problems, we still had to find billions of dollars, and we still do have to find billions of dollars for critical infrastructure that cannot wait. Specifically, water. Water and sewage is the most critical. Electricity, sanitation, roads, bridges. We have between 10 and 40 bridges that are now at a critical state of where they need to be replaced. So that was the triple threat that we had identified. And I think there was a lot of dialogue, a lot of talk even back in 2023 about the government's debt to GDP ratio. What could government do about it? And the answer is actually its tools were very, very limited. If you look at the way the tax mix is and the way the government revenue is earned, personal income tax doesn't give you very many options. I think from memory there are 140,000 people in the FIRCA system. 120,000 of those people to pay no personal income tax because the income tax threshold is set at $30,000, very high. So from personal income tax viewpoint, you're looking at a very, very narrow base from which to tax. Long story short, if you're going to drastically increase government revenue, which it was necessary to do, there was only one place to go, and that was VAT. And that, unfortunately, remains the case. And for what it's worth, as a sidebar, I think that the government's decision to reduce VAT a year ago, or however many years ago, was a mistake. It's deprived the government of, and Poonam will tell me, 300 million, I think, approximately, in revenue, maybe a bit more, 500 million. That is money that the government actually needs, as we've talked about. And we can talk about whether or not the government spends the money well. That's a fair question to ask. But if you don't have the money, you can't even look at your options. So, in the 2 minutes that I've got left, I think it's really important that we remember that there are not many revenue-raising options for government, and unfortunately, VAT is the only one. I agree with Nilesh that the reduction in the VAT might have made for a good headline, but I don't think it really made an impact on people's cost of living because, as he said, that 2.5 over 115 is effectively only a 2% reduction, and that's very easily absorbed by those who sell goods and services. So what I think is important is, and if we talk about what has gone well in the last 3 years, I think this bit is really important. Government has opened up the space for debate on the economy, debate on everything, actually. I'm sure the government thinks there's probably too much debate now. But that was really important. It's significant that we had not had a fiscal review committee meet or report in 2023. The earlier one had been 2004. So there really wasn't enough discussion and debate about what fiscal policies should be. And I think what the also government has made fiscal policy a little bit more predictable. We've moved away from taxation by surprise, and government has been able to give the business community in particular, a certain amount of certainty and predictability after having set the new tax, corporate tax 25%, VAT at 15%. However, I do feel, and I come back to this point, that government is not addressing all of the issues that we have been talking about with urgency. As I say, there are plenty of options, there's plenty of advice. The urgency just isn't there. Economic growth post-recovery, we've talked about. It's really just been luck, in my view. Tourism had this rebound after COVID, and it kept going. The tail of that rebound was a lot longer than many people predicted. Now that it's settling below 3% or below, that's just not good enough. I think we've heard that 5.7% is what we need. I think personally that if we were taking the right options, 5% would not be difficult. We've seen that there's been no significant change, in fact, even a slight increase in debt to GDP. We had aspired for government to get GDP down to 70% by 2030, debt 70% by 2030. That's no longer going to be possible. Nothing saved up for a rainy day, so if we do have a crisis, if we do have a cat cyclone or an earthquake or something like that, easily we could lose, it could cost us $500 million. We do not have that money saved up for a rainy day. Two things, because I want to just talk, and this is my last point, about two things where I think we could get, not necessarily some quick wins. One is water and sewage. We are critically behind on that. We have not done enough to replicate we were able to replicate the transformation of the Fiji Electricity Authority into EFL. Say what you like about EFL, it's now sustainable, has its own balance sheet, has its ability to expand and invest. The Water Authority of Fiji is way behind it, does not have financial autonomy, does not have the ability to invest, and is chronically underfunded. One of those bottles of water, you can pour about 1,400 of those down a sink and pay 15 cents. That's what you're paying for your water, most of us in this room. It's just not enough. And even to get water to reasonably, a reasonable level where there's sufficient revenue earned, we're just not there. We have not addressed the water and sewage issues with urgency at all in terms of the corporatization of WAF. The other thing, and I think the quick win that we could get, is on immigration. We talked about helping the private sector along. We talk about this pipeline, which seems to be getting ever bigger, although possibly more clogged. It was 3 billion, then it was 5 billion. Now I think we're talking about a 7 billion pipeline. I'm not sure about that. But to move that pipeline along, to actually make things develop, we need to get skills into the country. Without the skills, without the builders, without the engineers, without the accountants, without the architects, we cannot get this program of investment moving. And I've been disappointed that we have not been able to improve and make the immigration system more effective so that we can get those skills in quickly. All right, I've exceeded my time, but I hope I've given people a little bit to think about. Thank you.
Ladies and gentlemen, it's now time for our talanoa around the state of the economy dialogue this morning, and we want to extend our sincere thanks to all of our panelists for offering their valuable perspectives this morning. In terms of the everything that we've heard, if I can just ask our esteemed panelists, if there's one word you can use to describe the state of the economy of Fiji today, what would it be? And why that word is important for you? Maybe we start from our right.
I think it's difficult to put it in one word because a lot of words have been said. It's resilient, but it's fragile. There's a lot that needs to be done to get us to where we need to go. There's need to do what we need to do with urgency, and there's a need to act now if we are going to have a resilient tomorrow.
It's vulnerable. I'm saying vulnerable because I think we can turn it around. But we need, better institutions. We need better leadership. We need, those communities that's working outside the government to have some guts and stand up and say that, look, this is wrong, and this needs to be turned around.
Thank you.
I think it would be transformation, because at times of crisis, this is where you realize your real potential, and then that's where you strive out and outline like a star.
Thank you.
Well, I wanted to say vulnerable, but Dr. Reddy has said it first, so I'd say that it's in a pretty precarious state.
I'd probably use the word critical, but as I said, my preferred word in terms of looking forward is urgent. Act with urgency.
In that context of urgent, vulnerable, the third question for our panel this morning was, what are the reforms that are needed? There's a lot of experience in this room. There's veterans and champions in this room that have seen the Fiji economy evolve in the last 20, 30 years. And I've also heard some of these things we've said sort of over and over again. So what would be one thing that we feel that in this current context or landscape, if we don't do it, it will be the point of no return? It feels like if we're vulnerable and it's a crisis and it's urgent, what's the one thing that we need to do that if we don't do it, then it becomes even more precarious for us? Yes, very balanced. We'll start from the left now.
Start from, damn. I think probably, this wouldn't surprise you, that I just go back on what I said. This is now at political level. It's clear, that the assistance is available and the options are available, but the government at the political level must act. It's got to focus on the economy, not to benefit business and the rich, but to actually grow the economy, give itself the revenue so that it has the options to achieve the social objectives that have to be met. I spoke about a couple of critical issues. I think immigration would be the quick short-term fix in order to get the skills into the economy, to unblock that pipeline. But we do also have to focus on water and sewage in particular, because if we do not have that capacity, we literally can't build things. We can't build houses, we can't build factories, we can't build hotels. And that's becoming a constraint on our growth.
Yeah, well, I think one thing that has become absolutely critical is improving the expenditure mix. I've been very wary about recommending a substantial decrease in government expenditure overall, because Fiji is a state-driven economy. And the last time that we tried to do fiscal consolidation, when the economy was on a roll, was in 2019, and that resulted in I think approximately 0.6% negative growth. So the state unfortunately cannot drastically reduce its expenditure. But what needs to be improved quite urgently, of course, quite critically, is the expenditure mix. So the state will need to probably still deliver around perhaps $4 billion budget or even $4.5 billion budget, but then around 30 to 35% of that needs to be committed to capital expenditure or expenditure that is going to actually grow the productive capacity of the economy.
Great, thank you.
Just building on to the Mr. Lal and Mr. Naidu, I think during this time we've seen what the situation of the country is. The data have just presented the reality. What we need in order to transform is to ensure that there's a whole of national approach. Not only on government side, government's responsibility on ensuring that debt levels are sustainable, that we have sufficient capital mix, but we also need private sector on board as well. And not only private sector, all industries, because at the end of the day, the entire nation is affected by the current situation. We need an inclusive approach to this situation, and that will ensure that we strengthen the capacity of implementation as well on the ground. We have plans, government gives broad plans. Even if tomorrow, if the CAPEX mix doubles up to 50-50, does the ministries, does the agencies have the implementation capacity, or we are looking at lower utilization of capital funds? I think Ministry of Finance can tell us the data, but we also need to look at the implementation capabilities and strengthen that capacity. And that can only be achieved when we have the entire nation working to it, in whatever form it can, with whatever the industries are. So it needs to be a balanced and whole of national approach.
Thank you. A couple of things. One is, I think government should move away from incremental budgeting towards more outcomes-based, number one. Number two is that instead of consolidation, I think there should be a shift of OPEX to CAPEX. And number three is that there should be a major shift in the way we look at small and medium enterprises. Who creates surplus? We're talking about growth. Who creates surplus? Not government. It's the private sector. How are we assisting in new people coming into business? How are we, supporting medium enterprises? Small enterprises, okay. Medium enterprises will need to be taken to FDB with some bridging funds. So I think the upcoming budget should see a major thrust into really defining what is the targeted new businesses, small and medium enterprise we want to see, within the next 12 months' time. So, and then as I said earlier on, I think there should be a productivity mantra. There should be a national movement for productivity. Otherwise, we will be in a big trouble given what's happening with regard to the negative effects of social media at workplace.
I think the way I look at it is asking the question, who is going to generate the incomes that the government needs tomorrow to operate and invest? Government will not create the opportunities. These opportunities will be created by the private sector. So allow the private sector to thrive. Two, when these opportunities are created by the private sector, who is going to take them up? We need a healthy population to take up these opportunities. And we need everyone to participate, both women and the youth.
Thank you very much. Ladies and gentlemen, you've now heard from the panel. We'd now like to take the opportunity to open the floor for questions to the panel along the theme of the macroeconomic reality check of Fiji. Please.
Thank you very much to the panelists for the very interesting discussion. I have not so much a question. Can you hear me? Yeah. I have not so much a question, but I would like to make a small comment, if you allow me. So there has been a lot of discussion about debt dynamics and debt sustainability, and I just wanted to point out that in our report, there has been a lot of discussion about our report as well, but we do have an annex on debt sustainability, and in that annex we look at the ratio of debt to GDP, because that's what matters. So what matters is the amount of debt in relation to the resources available in the economy to repay it. So that's why we look at it as a ratio to GDP. And also I wanted to stress that in my view, but it's not really my view, it's the IMF view, because we say it very clearly in the 2024 Article 4 report, when the debt actually, the ratio of the debt to GDP decreased between 2023 and 2024, policies did play a role, and especially we believe that the increase in the VAT did play a role in that decrease of the debt to GDP ratio, as it could play a role now, if we were to increase VAT again, put it back to 15%, it could play a role to contain the dynamic of the debt to GDP and to create fiscal space. And in fact, in our report, we provide some options, some menu of options that the authorities could use to generate more revenue, which the bulk of it is related to the VAT, but there is also some, in our view, there is also some space for increasing compliance to tax administration in other kind of taxes, and that will free up fiscal space, and it could actually free up some space for increased capital spending, and also for some social assistance to the most vulnerable in response to the oil shock. So I just wanted to, it's forgive me, it's more of a comment than a question, but yeah, thank you very much.
Thank you. Thank you to the IMF for that. Ladies and gentlemen, it's a talano, it's a dialogue. Please, next question.
Thank you, Ms. Songo.
Thank you.
You asked a question for all your panelists. I wanted to answer that question, like if in one word, how would you describe all of this? My answer would have been depressing, especially when Nilesh was speaking. But I liked Professor, I was going to say Professor Prasad, but it's Professor Reddy. I liked your solutions-based. Now, I'm not an economist, right? But for me, for the solutions that you have suggested and all of that, one of the things that I would humbly contribute to the discussion is, if you want all of these things to move from negative to positive, if you want your urgency to be addressed, if you want women and youth issues to be addressed, if you want your solutions, finance, never mind with your transformation, Dialogue Fiji. I was telling Sam here when you were speaking, I think we should leave and go home now. There's not much hope for us, but I think one thing for any economy and any economist is you need stability, which means governance is an issue. I think if we address some of these governance issues, we have stability. If we have investors going, is this a place we can invest in? Will they, won't they? Will they increase the tax? Will they decrease the tax? Will they cut civil service pay? Will they keep it, the stability? I think for any issue in any area, the first thing we must look at is governance and the stability of governance. And of course, respecting court decisions and things like that. I'm just going to be quiet there. But I think that is an issue that we should all look at as your baseline before you start talking about economy, human rights, and all of the other things. How strong are our security forces or police forces? How stable are they? And of course, the other big thing on top of it all is corruption. When you were talking about the pipeline, Richard, I thought you were talking about the drugs pipeline and the money laundering pipeline. That perked my interest. And that's why you need stability, and back to the key word that I've been saying, governance. Thank you.
Naka, thank you. Thank you very much. Stability and governance coming from the front. Our other, we have a hand at two hands at the back. Oh, three. If we could ask a question at the end of that would be fantastic for the panelists as well. Naka.
Thank you very much to all the panelists. I was quite impressed with the IMF presentation that you highlighted the need to have more women and youth engaged in the development of the economy. The question that I have with all of you, we know that apart from taxes and job employment opportunities, what can you really do to ensure that women are truly and honestly engaged in the economy? We know that we have the Development Bank, the Merchant Bank, all giving out funds to women, but at the end of the day, it adds more complications and stress instead of making it easy. So it's one thing to say that you're supporting women to try and grow the economy, but to make it accessible and honestly enabling the women so that they can help in making more funds for the family as well as growing the economy. We all know that when women are engaged, they could contribute a lot to building up cottage industries and all other microfinances and the schemes that you may have. So my question is, what would you suggest, instead of just highlighting that we need more women and youth engaged in trying to develop the state of the economy? Vinaka.
Great. With your permission, we'll answer that question and then go to the next two hands that have been raised. Dim, any takers for this question?
I think you alluded to at the later part of your question. Basically, as I said earlier on, government should come up in this budget about grant and matching funds for small and micro enterprises. That's where you'll see a lot of these women who are actually doing some work. You can assist them in better, with better equipments and better facilities, and come up with maybe incubator facilities as well to develop them better. Yeah, I think that's the way to go.
So on the question of how we can facilitate women into jobs, we'd have to ask the question, what is keeping them away from jobs? And one of the things that we highlight in the report is that the chronic diseases diminish the ability to provide one-child care. As we mentioned earlier, that the women are the caregivers, having to make the choice between caregiving and engaging in the workforce. And then two, there are gender biases in the workforce. You look at women get paid less than what men get paid for the same job. So then how do we encourage them to take up these opportunities so that they don't shy away from rising to the top and having to choose between their other responsibilities in the house? Because it is possible to take up it. So one thing is, when you have a healthy population, then you're not having to let the women decide to go to the homes and take care of the sick and the elderly. That's number one. Two, when they're encouraged by the fact that for equal work, for the same work that I do, that the same man pays, we close the wage gap between men and women. So there are opportunities, and we've seen banks come up with products that are specifically targeted to women to encourage, for example, access to credit for women businesses, to encourage them to take up these loans to expand the opportunities. It's targeted solutions. And what we are saying is not that men do not also deserve these opportunities, they do, but what we are trying to do is to close the gaps that exist therein and encourage them to participate economically.
Thank you very much. We had two other hands.
Thank you. My name is Satish Kumar. I have a general observation. I have been critically observing and scrutinizing the public spending by successive governments over a period of time. And my observation is, why do the very same leaders, when they're in the private sector, in their own household level, their behavior is totally different. The moment they enter the high office in the public sector, it's another story. And here I'm talking about public spending. The behavior changes because it is not your hard-earned dollars, it is the taxpayers' fund, and you spend it left, right, center, the way you want it. You recruit whoever you want it because he's your favorite, he's your family, he's your friend. And spending power, whether it was a big campus in Lambasai starting with 8 million and ending up with 43 million, yet not complete, or whether it was a swimming pool in Latoka, and millions are poured, no accountability. Then we have witnessed recently a resource-based, natural resource-based bottling, pioneer bottling industry being gifted with extended tax holiday. They enjoyed the benefit when they started. And then another 7-8 years of tax holiday to a natural resource. What is happening? Why do we behave differently? Where is the value for money? Our spending changes the moment we dig into our pocket and put it outside. But the same behavior is not there once you are into the high office. We see luxurious Land Cruisers. Even the security guard enjoys the same Land Cruiser as the minister. Where's the threat? We have to cut down. We have to learn to live within the means. Our revenue, we easily shoot at the taxpayers to get in the more revenue. We never control the expenditure. And these are my concerns, when and where we put a stop to all this nonsense practice. Thank you.
Thank you. I think we had another question from the other table. There's one here, one there, and one there. Thank you.
Thank you, Moderator. Actually, my question is based on a teaching when I was in theological training by the late John Wesley. It's on economic living. And the term is to live within our means. I think that's been raised by Mr. Kumar. What I'm trying to say is, if the panel can sort of elaborate, can a government just live within its means? I mean, spend what it earns instead of going into borrowing all the time. And secondly, if I can remember correctly, there's only been one budget by government that there was a surplus. The rest was just deficit. They always have a deficit budget. I stand to be corrected. But really, my question to the panelists is, what would happen if the government just live within what it gets, as the teachers suggested? Why borrow?
Okay, so perhaps I can respond to that. In fact, it is suggested, it is highly desirable that developing states have deficit budgets, or these are also called expansionary budgets. For a country like Fiji, which is essentially a state-driven economy, if the state lives within its means, as you phrased it, it is going to lead to a decline of the GDP, and that is not desirable. So the state drives the economy. It has to spend at a certain level to continue to drive growth. So that is definitely not going to lead to positive outcomes if the state suddenly stops spending at that level.
I think to echo that, I mean, even in our lives, most of us borrow. We borrow to buy our houses, we borrow to buy our cars, and that makes us more secure, it makes us more efficient. So I don't think the borrowing is the problem. The question is, how we spend it. And of course, one of the challenges and one of the ironies in the government is that capital and operating expense ratio, it's a little bit odd because there are things, for example, in capital like operating grants that shouldn't be there, and that kind of makes the capital ratio worse. But I think the irony is that government very rarely spends what it budgets for capital expenditure. And that's simply, again, because the government is not efficient enough to get many of these important social investments, whether they're roads or bridges or hospitals or whatever. They're not efficient to actually get that capital expenditure out the door. And that is another challenge. You're talking about things that will actually improve people's lives, like roads and bridges, water, and so on. We can't actually engage in that capital expenditure efficiently, and that works against the people.
Thank you. Thank you very much. We have one question from the back.
Good morning, and Bula. My question will be actually basically for the representative from the Ministry of Finance. We are on the 4th-year budget. You have said in your statement that the private sector should do more to generate more revenue for the government spending. You take the revenue from left, right, center, and basically consume for the service of civil servants almost 70%. You're asking the businesses to generate more revenue, but you do not invest in infrastructure so the businesses can drive and generate more revenue. It's a 4th-year budget, and it's a time that your government will present a budget. I wanted to know that does other measures taken by for the last 3 budget and for coming on the 2026-2027 budget, what are the new measures taken by your government? Did your government talking to other ministries who are coming now, negotiating on the performance of that? Because I think in this all general question we can see, or in the debate, that the productivity of the civil servants has been declining, because if we have 42,000 plus civil servants, which is a country size, we might be flourishing today. And it clearly sees that the service has declined. I do agree also with the Mr. Naidu that the immigration is one of the agency that has actually did what it's supposed to, or what is not doing what it's supposed to do, because of not only bringing the skilled workers, but at the same time we have seen in this country that a lot of policies that could have actually helped the development and the economy. Especially, I wanted to ask Ministry of Finance, you know that we have more than 3,000 dependent in the country, married to Fiji citizens, and the dependent of a work permit holders, qualified, educated people. They should have given an open right to work rather than actually bringing workers who remit money back to their country. The spending will increase. So the question to Ministry of Finance, are you taking some kind of measures, proactive measures, progressive measures that actually will help the economy to grow, and at the same time coming up some kind of constructive for our country? Vinaka.
Thank you, for that question. I think I work with the Ministry of Strategic Planning, National Development and Statistics. So I think there's a representative from Ministry of Finance present here who would be able to answer those questions as well. But in terms of the national planning and the strategic forward-looking, we are looking at not only to increase the revenue from the private sector, it's actually generating it within the economy, not only for the government, but for the betterment of the entire country. And this includes improving living standards for the people, improving ease of doing businesses, performance, productivity, and skill front as well. I mean, the National Development Plan forecasts that we will have like a 5% economic, ideally a 5% economic growth over the next 4 to 5 years. But now with the current situation, that has changed. So we need to look at some of the measures what government can do, and at the same time balance out that approach. And that would mean whether we are going to look at measures that are going to increase the revenue. I think finance would be a better position to answer that. But we are looking at institutional reforms and things that would create that enabling environment. One, creating that enabling environment, using the productive labor market and ensuring that we strengthen on the skills that we have. 51.2% of the population, of the working age population, of the 884, 887, around 615,000 people are of the working age population. And of that, only 51.8% are in the labor force, participating economically in formal sector. So how government can encourage that? What are some of the things that not only government but the private sector and enabling environment, and this is through the schemes, the initiatives, and it requires a long-term planning as well. So we're not looking at the current state, we're looking at projected growth and how we are able to rebound with this crisis. I think Mr. Nilesh has also mentioned that
after one crisis, we are faced with another. Whether it's a disaster, whether it's economic shock, whether it's a COVID-19, it's a pandemic or something. So we need to be ready. We need to move out of that cyclical slow growth and to ensure that we have the systems in place. And that is where the strategic foresight of the planning department also comes into play, and that would assist. So I hope that does answer. Thanks.
Thank you. Thank you very much for that. We have two more last questions, one from the back and one from one from the front. Eh?
Sorry, I've heard a lot mentioned today with Mr. Naidu mentioning about water and sewage totally. I think another important thing is waste management, and we've just had a big drama about that recently. Renewable energy, and nothing about the agriculture sector. Totally agree with Barbara. I think with all investments, the protection and the safety of it, in the agriculture sector, you plant 3,000 yangona, you'll get 3,000 stolen when it's only 4 months old at the moment in the north. So I guess my main question that I'd like to ask is, and I feel this is really important, is what are we doing to increase the participation of the Itaukes as owners of the resources? I think we need to do a lot more to make them participate. Otherwise, we'll keep going around in circles without the resources. Naka.
Naka. Perhaps if we could take the rest of the two questions, and then we'll have one round of answering. There.
Thank you. My name is Simeon Rasova. I'm the General Secretary for the Social Democratic Labour Party, SODELPA, and this is a political table. So you'll be having... thank you very much. I take it over here that the education sector, a statement was done over here. It kind of won me to, because my party leader is the Minister for Education, Honorable Senator Ndondo, who will be a guest speaker tomorrow probably. And the statement was said, education sector is not fit for purpose. Now we, sits there the former education minister, Dr. Reddy. I think you people can answer to this. Because our party leader inherited whatever the neglect that was done for the last 16 years or 18 years. We took over in 2023. Education is not fit for purpose is kind of, the campaign period is now commenced. What we're going to do to try and fix that, the statement is now going to go public tomorrow, that education is not fit for purpose. So can you people clarify what is not fit for purpose? Naka.
Okay. With your indulgence, we'll take one more question, so that we'll give the panel an opportunity to answer all three.
Vinaka, Josiah from the Fiji Council of Social Services. I know the discussions have been around growth, debt, and economic resilience, and in most of the work we do, we work with the informal sector. We work with the informal economy. So I would love to hear from the panelists, from the different angle or perspective. Can they shed some light on the contribution of the informal economy into the resilience of our economy at the end of the day? What does it look like, or what it should look like? We've heard about statistics on unemployment, and also more targeted approach towards the contribution of private sector, which is acceptable and which is something that we would love to see as well as civil society. But what about the informal economy or the informal sector that is also a backbone of our private sector in Fiji? Naka.
Naka. Thank you. So in summary, our three questions for the panelists. One is the participation of indigenous Fijians. Two is education is not fit for purpose. And three, the informal sector. Where is the informal sector in the economic reforms and the state of the economy for Fiji? Maybe we'll start from the left as we do our last round for our panel. We'll start from my right, your left, and then we'll give the panel an opportunity.
So these are very good questions, and sometimes I always say that we don't always have the answers to all the questions that are asked. As a matter of fact, some of the answers lie with you. But having said that, if you look at the informal economy, it is also a participant in the economy. They employ, they pay their due share of taxes in the way that they do it. It's just that they're not formally recognized, and the formal recognition is different from one economy to another. So we are not saying that we are looking at just the formal economy. When we talk about ensuring that the capacities of workers are enhanced, it's not just those who are participating in the formal economy, it is also those who are participating in the informal economy. When you're talking about productivity, it's not just productivity in the formal economy, it's productivity also in the formal economy, because we consider all of us as participants. When we ask the question, who is generating the revenues for tomorrow, it's not just the informal economy, it's the formal, it's also the informal economy. So we are talking about all of us, both those in the formal and in the informal. Now, in the definition of the formal economy, sometimes it's those who are recognized for tax purposes. But it doesn't mean that the informal economy is not also paying their due share. So it's, in our discussion or in the insights that we are giving, it's not specifically geared towards one segment of the economy. It's looking at all of us. And that's why and that's why we were saying that everybody must be a participant in the productive economy, because everybody is contributing to the growth of this economy, both in the formal and in the informal. And in some regions, you will find that the informal economy actually employs more people than the informal economy. So we are all participants. I'll leave the question of education not fit for purpose and participation of the indigenous people. Again, it's the same way we look at it. The opportunities that have been created, who are they being created for? They're being created for all of us. And that's why we say, if the opportunities have been created, do we have the people who are going to take up these opportunities? And without discriminating on who needs to take up these opportunities, it is all of us. But there's a statement that is said that when opportunities are created, they don't wait for us to get ready. So we also have to ask ourselves, are we ready to take up the opportunities that have been created? I'll leave it at that. Thank you.
Thank you. See, I'm not going to respond to the question about education not fit for purpose. Whoever said that, they will defend that. Now, but the later part of your comment about, you inherited over the education ministry. Look, Simi, I challenge you. What I did in education and agriculture, I challenge you. I will list down the achievements, and I challenge that any minister can break that record. Right? But that's not for today. Now, back to agriculture. Unfortunately, agriculture's contribution has been undervalued. And I'm a bit disappointed with the World Bank presentation saying that tourism is the sector. No, absolutely not. So you need to understand, after feeding the entire nation, agriculture exports is higher than sugar. Primary exports I'm talking about. Forget about processed and all those. So unfortunately, people are not putting into perspective the role agriculture has played in sustaining and driving the economy, because a large part of the production is from the informal sector. It is not captured in the output that Bureau of Stats. And I was trying to get there when I then finished up in 2022. Now, my second thing is that look at COVID period, 2 years. Which sector was exporting? Not tourism, totally closed. Entire economy was shut down. Agriculture sector. We were feeding the entire nation. We were securing the households with respect to food. And over and above, we were exporting, despite the increase in freight rates. Agriculture, this was the only source of income, foreign currency to the country at that particular point in time. Unfortunately, all the stats that's coming out, it's understating the real contribution of agriculture. We need to get back to the primary sectors.
I'll just touch base on the informal sector, and I think the pathway to resilience would be ensuring that the informal, like most of the times we find that informal sector, if it's not measured, we think it's not contributing. But in fact, it really contributes to the economic growth, economic generation, and as government ensuring that there is sustainable financing pathways as well. How we're able to expand these informal sectors, some into formal sectors, while just assisting them on how things can be better. What are some of the expansions we need? I mean, more than 70% of the businesses in Fiji are micro, small, and medium enterprises. So we need to look at and focus how, from a small business, we're able to encourage it to a medium business. What is working with the agriculture sector and the business community in micro enterprises? How can we make it a larger entity? So those are some of the things that could be further for discussions and initiatives that we could leverage on from the government to boost the informal sector.
Thank you. Well, I think in a developing state like Fiji, every sector that has potential has to be exploited. So informal sector, I think it has continued to play a very significant role, even though it is very hard to capture outputs from that particular sector, but its importance can never be overemphasized. The other aspects that were mentioned, indigenous participation in business, definitely that is absolutely critical to bring about economic equity, which has been a cause for conflict in this country, has had political ramifications and so forth. There's also, when we have an economy with scarce resources, there's also a need to eliminate all rent-seeking behavior. And so, there are certain demands that are coming for people to get a bigger share of the pie. But we have to be quite wary of the fact that they should not end up, shrinking the size of the pie as well. And as far as education is concerned, the state has made very sizable investment in education, but we have to measure objectively whether we have received, good quality outputs from the massive investment that the state has made in education.
Okay, let me start with something I know, rule of law, because Barbara raised that. And I think, just to touch on her point, the one thing I do give this government some credit for is improved predictability and stability in policy making, particularly in the fiscal area. As I said, previously we'd all sort of sit by our TVs and wait for the budget address, usually late, and never really be sure what was coming. Whereas I think this government, to its credit, it has been much better at signaling early what would be in a budget and not, from a policy viewpoint, creating surprises. I think also, and Barbara is the most famous litigant in Fiji, may or may not agree, but I think the government has taken steps that have improved the independence of the judiciary. Also very important if you are an investor, considering whether or not you should invest. So that's rule of law. And policy and predictability. I think this government deserves some points for that. Education, right, I've got to plead guilty. I'm the one who said education is not fit for purpose, and I speak really as an employer and speak to many other employers. I don't think we have, in terms of output, as Nilesh has said, we're not producing a workforce that is sufficiently literate, does not have critical thinking skills. And this was, I think, something that I didn't touch on when I spoke earlier on, but 20 years ago, we talked, if you talk about international competitiveness, we talked about the digital divide and how, the global north, in terms of its digital capabilities, was going to completely dominate the global south, the developing world. Well, artificial intelligence has just supercharged that digital divide. And if we are not ready for that wave, then we are going to fall even further and further behind. And that has consequences for all of us. As I said, we can't just sit here in Fiji and say, let's grow at our own pace. Let's do things at our own pace. because everything is relative. And if we want to live and participate in a global open economy, unfortunately, we do have to compete. And so we can't afford to sit still.
Great. Well, ladies and gentlemen, there you have it, the panel on the macroeconomic reality check. In summary, debt is increasing, GDP is increasing, but is it sustainable? Just checking that everyone's been listening. Is it sustainable? Not strong enough. Is it sustainable? No. Our current oil crisis, I think the scenario, the reference scenario that was mentioned by the IMF assumed a short duration to the current oil crisis. It's now spanning longer than we anticipated. I think a lot of our panelists and also our audience have pointed to the people that are affected, our people that are affected. Is it sustainable for the people? I think not, eh? The current prices for fuel will inevitably transfer to other services and will not be sustainable. The common theme of productivity is clear. The third question for the panel was, what are the types of reforms that are needed for economic resilience? Productivity seems to be coming out quite clearly, and also the need to pivot from operational to capital investments. If we can't reduce debt levels, the economy is growing, GDP is growing. The most immediate focus is to pivot from consumption to capital expenses. And how do we catch all our communities that will suffer every day as a result of prices rising? Eh? So this is the macroeconomic reality check that now sets the theme for the other panels over the next 2 days in this 2-day State of the Economy dialogue hosted by Dialogue Fiji and partners. Thank you once again very, very much. Naka.